Can you increase the rental income? Renovations, updating to the properties, amenities, these are all things that can be considered. In Florida, we do have a short-term rentals capability, and depending on how close you are to the beach, you might want to keep, if you have a multiplex, a couple of them as Airbnbs or seasonal rentals. You can then adjust those rents to make it more marketable. You can do real fast turns on the conveniences of beach or waterfront or some of the local lakes or some of the local hiking, forest trails, etc. Access to fun things in an area is what's going to make people want to come to Florida all by itself, right? You've got the most desirable living community in the United States in Florida, more beachfront and waterfront land and property throughout the United States. You want to be able to capitalize on that, and here's a good reason to do it. Increasing your rental income is going to help it obviously make it more marketable as well. When it comes time to sell the property versus service the property, you'll be in a position to be able to show good growth. You'll be able to show good margin increase year over year. And then, of course, the strategy of the long term, where the purchase price of the property versus what you're selling it at now is typically 5% or better year over year in the state of Florida. Second thing you want to concentrate on is reducing those vacancies. You enforce tenant screenings. This is not about a handshake agreement and, yeah, these seem like good people. Profiling will break the bank every single time. You need to do a full screen and have incentives for lease renewal. Maintain good relationships with the tenant. And again, if you're an out-of-state owner or an absentee owner, you absolutely want to make sure that the rental management company that you have hired is consistently knocking on the door, not to check on your property so much, but to validate that the tenant is good, that all things are great with the property, and is there any additional services that they can provide to make living in the home better for them. Lowering the operating expenses. Your rental management company is also going to have access to local vendors that are going to keep you from spending unnecessary monies, or worse, overspending on repairs that absolutely need to get done. So for them to be able to consistently check insurance rates, compare property management fees, maintain the properties, and invest in energy efficient upgrades for your home and your investment are going to go a long way to not only the immediate profitability and that monthly income strategy that you have, but in the long run, just like you took care of your car for 5 years before trading it in, you can hand them a full maintenance catalog of, here is year over year all of the things that we did to maintain the property. We didn't just wait till it was time to sell it. Let me repeat that. We didn't just wait until it was time to sell it to get our property up to snuff. That came in loud and clear for you. Optimizing the financing is also an incredible piece of strategy. You knowing when you need to refinance your loans, pay off high interest debt, and find alternative ways to finance the purchases to keep that property afloat and to keep it positive cash flow are going to be really important. And again, your local strategist or property manager is going to understand how to do that for you if they're worth their salt, which of course brings you to efficiencies. If you're also able to, in all of that, increase your efficiencies, implement a good real estate management software for yourself, or make absolutely sure that the management company is giving you consistent reporting, preventative maintenance, monitoring the cash flow on the regular, doing a quarterly and an annual planning for your investments, not only maintenance, but growth, and strategizing against rental rates in your area are all going to increase the total capabilities of this for you. Frequently asked questions. I get a bunch, especially being a management consultant myself. I get a lot of questions from people that already have properties and what could they have been doing better to maximize on that. We're going to be actually be doing a class right here in our local community in the next month to be able to show current homeowners and some out of states, for those that have requested that they can actually do a video meeting with us too while we're live in that session, What are you doing to maximize the potential cash flow of your property? And what are you doing wrong in the community today because you've been doing this for 10 years now that you probably need to change your strategy on? Good cash flow in real estate simply means that the property generates enough income to comfortably pay the expenses. It's going to leave you some room for some unexpected costs and allow you to have a nice fluctuating buffer there. Generally, investors are looking for at least 1.25 on a cash flow ratio, meaning that for every dollar of expense, the property will bring back a dollar and a quarter in income. This ratio is going to ensure that the property not only is able to cover its financial obligations, but it's also going to offer the owners profitability. Make it reliable, make it a sustainable investment. For my international folks that are talking to us right now about buying and sitting on properties here in the United States, it could not be a better time for you to do this. Right now, we have open opportunities to be able to still be very negotiable with the sellers that are selling not only multiple housing properties, but independent properties. And when you are looking at all of the large investment groups around the United States sinking their money into the real estate market, that tells you that now is the time to fly. If interest rates drop and you have waited for interest rates to drop rather than taking advantage of it today, you are going to be fighting a line out the door for everybody trying to buy this same shiny apple, and they're willing to compete with you for cash, ultimately killing your cap rate because you can't negotiate out some of these closing cost fees, insurance fees, capabilities, and maintenance that you could have done on the property at the current owner's expense and not your own. Talk to us about those strategies so that we can get you in front of a cooperative and negotiable market versus the white hot market that's coming when those interest rates do finally start falling down. How do you make sure that the property stays cash flow? A lot of due diligence. Before you embark on buying an investment, it is easy to ensure that the cash flow is positive. You simply analyze the local rental market. You get a feel for the demand. You get a feel for the competitiveness of rental rates. Are people simply pricing each other out of the market? Or are they all in agreement that this is what it should cost for a square footage of a modern living condition, and that's what you can expect to pay anywhere? So then availability becomes your metric of study, and not how do I calculate with precision all of the possible expenses. You will simply have to worry about the right investment, the right mortgage, the right property taxes, insurance, and maintenance fees that are being offered instead. Offering property upgrades to your clients and added amenities in a neighborhood that already exists are going to justify your higher rents. So if you are buying a home or buying a property with the intention of it being a rental unit at some point, the amenities in the community, the cleanliness, the security, all of the things, the neighbors in the neighborhood not looking like it's a damn auto zone and doing all of their car repairs in the front driveway, and nothing against doing some of these things yourself, but if every other house has a car out front that's draining oil, they are not going to consider this a place that they want to live or move a family in. So you need to be able to make sure that property upgrades and those amenities are going to help you justify that and make it a lot easier to get reliable tenants in place. Biggest question I get is, what type of real estate has the most cash flow? Multi-family properties are going to generally create the most cash flow because you've got several units in one property. One bad property does not crush the entire apple cart. It allows you multiple income streams, but managing one set of units in the same location. This will typically have a much lower vacancy rate than a single family home, and it will spread maintenance cost over many tenants, making it much more profitable overall. Your short-term rentals within heavy tourist demand seasons and areas in Florida especially will also provide a significant cash flow during those peak seasons, which is most of the time in Florida. When you're selecting that kind of real estate to invest in, you should seriously consider careful local regulations, watch the market conditions, and you will achieve that maximum cash flow. Positive cash flow in real estate is considered the central factor in every successful property investment. The objective to investing is to make absolutely sure that it will create a monetary transaction to the positive, make you money. Every single investor needs to take the time and invest the due diligence before you spend the money on any property. That is going to include a market analysis, property calculating income and expense spreadsheet, and consider improvements that will be needed for the property to continue to gain rental value. If you are looking for properties with potential solid cash flow, such as multifamily units or short-term rentals and hotspots, you need to run those properties professionally. You need to track the financial performances closely. You need to adjust your strategy as you go. What worked 20 years ago will not work today. You need to keep an eye on financial performance. You need to tweak your plan as needed to make absolutely sure that the cash flow in all of your ventures are going to not just be profitable, but are also going to provide you with some enjoyment. There's a huge bragging right to become a property investor. You don't need to own hundreds of properties to make a killing. In a good market, if you can own 2 or 3 properties in a well-maintained area and you are landlord boss and doing your job and maintaining the strategy that you set in place for yourself, you're going to do very well. While you are looking at higher interest rates, maybe selling your home's not the direction that you should go. Maintaining the lower interest rate that you have on your house might be the effective strategy to stay in a perfect investment opportunity for that home while you go buy something else for yourself. While you're looking through these different things, certainly reach out to us, throw us comments in the section, and of course, subscribe. We're not just here for real estate agents, we are here for our clients, and we want to make absolutely sure that together we make the real estate transaction worthwhile for everybody involved. We want to give you all of the value that you need for us to be your single point of instruction when it comes to what should I do next.